Well, for all of you who are able to make it onto this Zoom link, thank you so much for attending today's webinar on the Financial Action Task Force. My name is Clay Carrington. I'm the Executive Director for the Canadian Blockchain Consortium. We are a not-for-profit organization that's been going for about 3 years now. We were previously named the Alberta Blockchain Consortium, now renamed to be a national organization supporting Canada through our education, advocacy, and of course, events. So if you're interested in learning more about our group, who we are, what we do, we'd absolutely love for you to engage with us. Just come find us at canadablockchain.ca. And of course, as a not-for-profit, we couldn't go anywhere without the incredible support of our amazing members, as they're all seen on the screen. Just a big shout out and great big thank you to each and every one of them for continuing their support. Many of them have been with us since our inception. So thank you, thank you, thank you. The sponsor for today's event is Bitcoin Well. They are about to be the very first publicly traded Bitcoin ATM company in the world. They are an absolutely incredible company. They started in, was it 2013, and they've grown to now over, I think, like 110 Bitcoin ATMs servicing across Canada and looking at expanding even further. So Bitcoin Well, to suit all of your Bitcoin purchasing needs, you can find them at bitcoinwell.com. And of course, we absolutely love it when the community engages with us. We will have a live poll. We love to collect a little bit of information on our audience. It's mainly so that we can figure out, are you guys watching us all across Canada, and how do we need to improve our marketing? We will have a Q&A, so any questions that you may have for our incredible panelists, please put them in the Q&A spot. If you put them in the chat spot, it gets a little difficult to go and find the questions, especially if it's an active chat. So if you wouldn't mind just making sure you put them in the Q&A, that would be greatly appreciated. And of course, follow us. We're on Twitter, LinkedIn, Facebook, and if you like anything our panelists have to say, just please tag us, #CanadaBlockchain. And one of the other things we're really excited about, 3 years in, we've launched a magazine. So we're really excited about this one. It comes out the first of every month. And what we do is we research everything happening in the space of that 30-day period and try and put down into a very condensed, precise read so you can figure out everything happening in the Canadian blockchain community in a short period of time. So check it out. I'll put a link in our chat so you can see the magazines on our website. They are free. You do not have to subscribe to them. So please check it out. And so for today's event, really sad our amazing moderator couldn't make it today, Emma Todd, so I'm going to be filling in for her. Hopefully I'll do a good job as she would have. And to introduce our incredible speakers. So this woman, I love to call her a badass. She's absolutely incredible. Thank you so much for joining us today, Amber. She is the CEO of Outlier Compliance Group, which is a company that specializes in anti-money laundering consulting, as well as Dave Bradley. Dave, wave for the camera. He's the Chief Revenue Officer for Bitcoin Well, and helping them take everything public. He's incredible. And then we have Gabriel No. So Gabriel is a senior advisor at Financial Crimes Policy at the Department of Finance Canada. So thank you so much for joining us today, Gabriel. I think we met a long time ago back at the Futures Conference, so it's good to see you again. And then, of course, last but not least, the stunning Dina Mainville. She is the sales director at CipherTrace, a leading blockchain intelligence firm, and director of industry engagement at Trisa, an open source travel rule solution. And she is also on our amazing our FinTech Committee. So thank you guys so much for joining us here today. I'm sure this will be a very interesting discussion. I was not meant to be your moderator because I know absolutely nothing about this travel rule, so I'll do my best to ask good questions and get the discussion going. All right, so my first question to everyone, what is the travel rule and why do we keep talking about it? And everyone's on mute, just so you know. Whoever wants to answer this, you're all on mute.
I can take a stab at this to start with. So Claire, thank you very much for moderating the panel, and thanks everybody who is tuned in to be with us today. So the travel rule is a rule that was taken from the Bank Secrecy Act in the United States. So this is something that dates back to the 1970s. And it was sort of put forth by the Financial Action Task Force, which is an intergovernmental body who functions kind of like an AML watchdog. So their goal is to eradicate or at least dramatically reduce money laundering, counter terrorist financing, and reduce proliferation financing across the globe. And so in 2019, the G20 ministers got together and they said, you know, there's a risk that there's money laundering happening with cryptocurrencies. And so they took a piece of existing bank legislation and they are attempting to apply it to the digital asset ecosystem. So what it does is it's a data collection requirement that asks that when a virtual asset service provider, like an exchange, or, I mean, this is a pretty broad and hotly debated term right now, but let's say, just for simplicity's sake, we have an exchange who's going to facilitate a transaction between two parties. This travel rule asks that the exchange would collect information on both the originator as well as the beneficiary. So if I have Bitcoin sitting at Bitvo and I want to send to Amber, who is maybe using Coinbase, Bitvo needs to know who I am and who Amber is, and Coinbase needs to have that same information. They need to be able to share that and store it and make it available, you know, if there was an investigation that warranted the disclosure of that information.
Fantastic. Thank you. That is definitely a solid description. Amber, Dave, Gabriel, anyone else want to take a crack at it or expand on it?
Just to add to Dina's example, because I love examples in which people send me Bitcoin. In the same example, if I was using a private wallet, so a wallet where I held custody of all the keys. So for instance, I'm using my own Trezor, and that's where the Bitcoin is being sent as opposed to being sent to Coinbase, then there's nowhere for that information to travel to. The idea is that when you have a transaction that involves two different middlemen, two different VASs, then the information is transferred. When it's a transaction that just involves a private individual, which is very much something that's new in the crypto asset space that wasn't possible in traditional banking, then there's not that same expectation because there's really not an organization for that information to travel to. And I think that's always an important call out when we're talking about when the travel rule does and doesn't apply.
And I would just add to Amber's point there. So the FATF is an intergovernmental body and it does establish international standards, and that's up to every single jurisdiction to sort of implement that. And the focus of the standards and jurisdiction regulations is very much focused on institutions providing the financial services. So just again, I think that's a great point, Amber, to at least point out and highlight that it is very much focused on entities that provide financial services, similar to how any other bank or financial institution provides value transfer services.
And maybe, Gabe, just one other point that I'll add here, just to build on what you and Amber have said. If you look at anti-money laundering as like a global movement, I suppose, this was originally started because we were trying to bring a level of transparency to an opaque technology, which was cash. So the situation that we're in today is where we've taken an approach that we use for a completely different technology, and we're trying to stick it onto something completely new. And this is what's causing a little bit of the debate in this area.
Oh, Dave, we lost you for a second there. So understanding that, so they're looking at how to take like very traditional regulations that they have and try to apply them into a new space, like the blockchain and cryptocurrency space. How do you see these policy implementations like working in Canada? Do you see them taking like a really long time to try and get this worked and implemented, or do you see them kind of engaging with the industry and trying to help kind of sort through some of these regulatory hurdles?
So I can take a stab at that one. So Canada actually finalized its regulations in 2019, lined up with when the FATF introduced its interpretive notes on what the travel rule is and its expectations. How it's being implemented in Canada, I think it's a similar story throughout. There's no consistent or widely used technology that will actually facilitate this. So Canada actually introduced via its regulations the obligation to comply with the travel rule, but also providing for reasonable measures when you receive as a regulated MSB if you receive a transfer that's missing that information. So there is that reasonable measures built in until that technology is fully implemented across the industry, that we would allow and expect that, as things progress over time, what would be deemed a reasonable measure to obtain information would also evolve over time as well. So obviously what we're seeing internationally and, as part of the FATF Virtual Asset Contact Group, we're monitoring implementation. We're speaking with industry, especially, so for example, Dina's here is on behalf of TRISA, but there's other private sector industry associations and groups that are developing clear technologies to do this. But in Canada itself, the regulations are set to come into force in June. And with the expectation that Fintrac would interpret the regulations and understand that, what would be deemed reasonable today would obviously be different when technology is fully implemented.
Okay. So are there any kind of like current, maybe like technology solutions that exist to support this? And if there are, like, where is the technology development like really at?
I think this is probably one of those funny things that that keeps me up at night, just in terms of the implementation being expected to happen in June. And while I appreciate from the bottom of my compliance nerd heart that finance has written this in such a way where the expectation is that we'll be taking reasonable measures, historically, Fintrac has been sometimes very much a letter of the law regulator. So I think there's some good opportunities here for industry to be able to liaise with Fintrac and to be able to set some standards around potentially what does a reasonable expectation mean at this point in time. What will it mean 6 months from now? What will it mean a year from now? I think there is definitely a misnomer in terms of ideology, and people that I think are relatively well educated in the VAS and MSB space have said to me, right, but there are these projects and they're technologically ready and we just flip a switch, which is terrifying to me because there's amazing work happening. There are things that are in beta. There are some really terrific projects, but there's nothing that I've seen to date that's just ready to go. So I think that it's important to understand that there's nothing that's going to be immediately ready as of June 1st, where you just flip a switch and it's going to connect you to all of the VAS everywhere in the world and allow this transfer of information in a smooth and encrypted and privacy protecting way. But there are amazing efforts to start to make that happen. And I think those are very important efforts. When I look at those, the criteria that I always look for is that it has to be an open and interoperable system, in that I don't think that any one system that says every VAS must participate in this exact framework for this solution to work is going to work. We're going to need things to be interoperable. We're going to need things to work across countries. We're going to need them to work across languages, which is in part why I'm a big fan of the type of work that TRISA is doing.
Thank you, Amber. Yeah, and maybe I'll speak on the solution side. I think when people approach this subject, they just think, well, we're going to say these are the things that we want, and then industry is going to go and implement them, and then we've solved the problem. But this is a very complex issue, and it's not just ideologically complex, which it certainly is, but it's technologically complex. It requires a high degree of collaboration between different partners. I mean, there's two ways to achieve this information collection obligation. There's you modify existing blockchain protocols, and for everyone on the panel, they know this well. For anyone in the audience, I mean, just a gentle reminder, these are distributed systems, so you generally need consensus to be able to implement new rule changes, and that's not a feasible solution. So if we can't make modifications to existing protocols, we then have to build out-of-band mechanisms that sit on top of those protocols. So now we're talking about how do we standardize data? How do we create rules for when the message payloads are sent versus when the blockchain transactions are broadcast and confirmed? then you have the question of, as Amber alluded to, how do you actually secure that data? Because this is pretty sensitive information. You don't want someone's financial data leaking. And then now let's say you've got everyone in one ecosystem who has a way to share this information, interpret it in a common way. How do you then open that network up to other solution providers and develop that interoperability piece? And then finally, what about what we refer to as the sunrise problem? So in North America, maybe we'll be really aggressive with the development and deployment of our travel rule regulations, but that doesn't mean that these regulations will happen in the same way at the same time in different jurisdictions. So you now have this issue where you've got a certain subset of virtual asset service providers that are operating under these guidelines, and then a whole subset who aren't. So how do they speak with one another? Because remember, we're talking about a completely borderless technology. So these are really, 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 I can't stress enough, really difficult problems to solve.
Well, I guess that that really reinforces that it's unrealistic to achieve this implementation by June 1st. So if June 1st isn't kind of like the set date for it, do you guys have any ideas or expectations on like when a reasonable time frame could come up? Why are you laughing at me, Dave?
Well, June 1st is the date.
Well, I know, but I'm saying it's not really going to work by June 1st. So I'm saying like when do you see it like fully implemented, fully working, not just like flip a switch, as Amber said? It's like, that's kind of a scary thought. It's not ready for that. And as Dina kind of explained, like internationally, these companies aren't really ready to like speak to each other in such a way. So do you guys have like a time frame on the horizon where you might see more solutions coming forward?
Let me jump in as from the perspective of a VASP. So there's a lot of uncertainty from our perspective. Everything that everyone is saying is true. We're kind of hoping for Fintrac to be reasonable, which is like not a very good position to be in, obviously. That, you know, we're just hoping that they don't try to hold us to the letter of the law and enforce some things that are basically impossible. I'm not even sure that this is possible to enforce in a real way that also keeps our customers' privacy intact. I think, you know, like we're talking about the sunrise problem. I don't know that it's reasonable or feasible that if I could share, for example, my customers' information with a company like Binance or OKCoin or some large opaque exchange in Asia that I don't really know, with questionable business practices and morals, is it even a good idea for me to send that information to that party? And so I think there's a pretty big open question that's not even really being addressed here, is like everyone's kind of like going in one direction saying, well, let's just hope the regulators are reasonable and we'll solve this, or, you know, we'll kind of pretend to solve this. But the real answer, I think, is like it's like this is not something that I see actually being implemented in the long term.
Any rebuttals to that one?
I think that it's an interesting position. I think that there's always business decisions and trade-offs that we have to make in terms of what we do. I see that there are a lot of questions in the chat just in terms of privacy and anonymity. Generally speaking, from a privacy perspective, privacy law has inherent in it ideas like if you're compelled by another law to do a thing, then you have to do that thing. And that's, at least from a legislative perspective, how we tend to resolve, at least practically, some of that tension between privacy and AML. I won't pretend that I don't think there's a fundamental tension between privacy and AML. And I won't pretend to think that AML always gets it right. But I think that it's important to understand as companies and as VAS that when we have these obligations, then we have to either work or figure out how to work within that framework, or if we're not, be able to present the reasons that that's not technologically possible at a point in time. In essence, we have to choose our battles. And some of those battles, I think end up being worthwhile in the long term, but those definitely come at a high potential cost to the business. And so I do think that it's difficult to make some of those trade-offs. I certainly empathize with business owners that need to make those trade-offs. But from where we sit from an anti-money laundering perspective, you get to a point where the obligation is the obligation. We do have a question in the chat from Paul, where he's mentioned that in March or April, the FATF has talked about releasing additional guidance. And I'm assuming that's a question that's a little bit directed at Gabriel in terms of if the FATF's guidance comes up in such a way that it's different from what we've written from a legislative perspective, would we adjust that at all? I don't know, to whatever extent you can address that. I'm curious about the answer myself.
So I'll jump in here. There's a couple of things that I'd like to touch on, and I'll address Paul's question immediately first. So just in terms of guidance and what FATF guidance actually constitutes, those are non-legally binding, to what extent, if you want to call it international standards. It doesn't change the standard. So guidance is there to help industry, to help jurisdictions with implementation. So the guidance itself is not going to change the interpretive note from 2019 or the recommendation changes in 2018. So in that respect, guidance will not affect what the recommendations say or what the interpretive note says. However, to answer Paul's question, if the international standards were to change, then that implies that all jurisdictions would have agreed to actually implement those changes. So the short answer is the guidance isn't actually changing the standard. But if ever down the road, a few years from now, if it did change, all countries would actually have to do that. So it's not just a Canadian circumstance. It's actually all jurisdictions that are complying with international standards that would have to comply. I guess I'd also like to touch on Dave and Amber's points about, implementation dates of businesses and understanding where these requirements come from and why they're being imposed. And I think we need to take a couple of steps back in terms of why these standards are here. It's not necessarily to affect the technology itself or impede innovation or things like that. It's actually, again, these are businesses that have made decisions to provide financial services. When you enter this space, when you provide financial services to Canadians, there are standards. Forget the FATF standards, but there are actually Canadian standards in how you provide financial services. Beyond AML, you're looking at OFAC and sanctions and terrorist listings and things like that. So when you're talking about who you interact with, who your clients interact with, those are fundamental questions and issues. And I'm not minimizing the technology hurdles or the issues with implementation, because this is why we are having this webinar. Like, this is clear, and I'm not going to pretend it's not there. The tension, as Amber put it, it is there and it is present, and we do recognize it. But when businesses provide financial services to Canadians, we need to understand that there are standards that they need to comply with. And one of the fundamental ones are, who are you dealing with? And the next one is, who are your clients dealing with? And I think that's the foundation of any AML regime, notwithstanding, not specific to just crypto or singling any technology out, but when you enter the space to provide value transfer, cross-border transfers from one, regulated business to another regulated business, there are costs to doing that. And privacy is important and definitely something that we're definitely concerned about and looking to protect. But I think just that fundamental principle that we're sort of deviating from is just understanding why these rules are there. And I think it would be important to just point that out and highlight. But these are all great points by both Dave and Amber.
Yeah, I think that makes a lot of sense. Like, obviously there's a minimum standard where none of us want to be involved in money laundering, and we want to prevent that from happening. And the existing scope of the rules make a lot of sense and are actually fairly easy to comply with outside of this travel rule. I think part of the difficulty with the travel rule comes from the fact that there are so many potential different counterparties, and if we're relying on this, reasonable efforts, that's very poorly defined. And so, like, I could whip up a fax template that I send a fax to everyone who gets a transaction from me, and that might be considered reasonable efforts. But that would obviously make no effort to interact with, you know, TRISA or any of these other standards that are out there. And so that's kind of where, like, it's very opaque what actually constitutes a reasonable effort, and it's kind of unclear. Like, if let's say that in my previous example, I'm supposed to be sending some info to Binance, and they have no good way to receive that info, right? They're not using any of the standards that we're using. Maybe they don't have anything implemented at all. Is that my problem, or is that their problem? And if it works, what are they supposed to even do with that info at the end? That's kind of the, like, it, you know, it seems like we're kind of creating busy work without much of an outcome in mind at this point.
And Dave, I think, at least in the work that I've done with regulators around the globe, I mean, if you look, for example, at the Cayman Islands, they just released their digital assets framework. And within it, they incorporated a travel rule component. And they basically said, we really don't care if you send an email to the recipient VASP and you share the information that way. We don't care if you pick up the phone, just you need to make sure that you're adhering to this obligation. And it really doesn't matter how you do it. So I think in a lot of circumstances, I mean, most of the policymakers that are handling this stuff and most of the government officials that we're working with, they're not technologists. So it's very important for people who are in this space and who understand the technology and who understand the broader implications. The other thing that we forget is we're, in the context of what we're talking about today, we're discussing, you know, digital money. But blockchain's not just applicable to that. We're tokenizing a whole bunch of things, and these types of decisions will precipitate long-term effects and implications that we're not really thinking about and talking about. So it's just instrumentally important for people that are in the space and who get it to formulate a position and to work with their regulators, because for the most part, the regulators, they're not intimately involved with these technologies and they don't have all of the answers. So this has to be a collaborative effort.
The other piece that I think is really important is something that exists in every facet of compliance, which is the idea that compliance is never perfect. So I don't think there's a company on the face of the planet that is all of the time compliant with all of the laws and all of the regulations and all of the rules that apply to them. And certainly when something is new, when something is emerging, we're more challenged in doing that. And part of that becomes documenting what we did do, documenting the groups that we participated in, documenting the steps that we're trying to take, and knowing that certainly at the outset, there's not an expectation that this is going to be perfect. Like, I don't think, Dave, that anyone's expecting you to send a fax to an organization that doesn't have a way to accept this. But I think if I were in that exact same position, I might look at it and say, okay, I know what the company is. I've checked and I know they have no implementation. And so I've documented that we've done this. We have the data should they ever request it, but we're not just going to willy-nilly send it off into the universe because we're creating additional data problems if we do that. So you kind of have a sense of here's what we've done and here's our rationale for these things. And that doesn't even need to get into a case-by-case basis, but that might look like, here's how we deal with Binance right now. And maybe we revisit that periodically, you know, once they do have something implemented, and maybe they're in a jurisdiction where they're not going to have something implemented for quite a long time. So the idea is that you have to keep tabs on those types of things, and that's incredibly onerous. One of the other tacks that we've seen VASPs in the US take, because the US took the position that, hey, the travel rule is already enforced for you, is to say that you can only transfer off our exchange or out of our VASP to a wallet that you control. And they have some type of determination in terms of, is this Amber's wallet or is this Binance? I don't think that that's a perfect solution either, but I think that there are some interesting kludges for the interim that you can build with things like that.
Yeah, I mean, that's
particularly user-friendly.
That's functionally the solution, right? Like, there's not actually a difference in terms of if somebody's going to launder money and they're going to buy it from our our service, for example, and part of the workflow of this money laundering requires them to send that to Binance. If they send that to an intermediary wallet that they control in the middle, that functionally changes nothing, right? And so we're talking about a situation where, you know, in a best case scenario, what we're doing is documenting why it doesn't make sense for us to really comply with these rules that we can't really enforce, that the client could easily circumvent if they had a very basic understanding of the rule. And I think all of those things do basically nothing to accomplish the goal of limiting the activities of people actually trying to launder money. In fact, it might push things in the opposite direction in the long term. If all of these regulations stack up to be such a limiting factor that becomes very difficult for a consumer, or at least more difficult for a consumer to deal with a regulated entity in a way that complies with the law, it's just going to create an opening for a black market to emerge. And, you know, you're going to have the people who are actually looking to launder money are going to find a much easier way of doing that if legitimate users are supporting the black market of Bitcoin sales in Canada.
Dave, you said a lot of things that I really want to jump on. Lots of really good points here, but I think maybe one that I want to pick out in particular. I'm gonna try to eloquently weave everything together. But so if we look at what has happened in the United States, I think it was in like November or maybe the beginning of December. There were some rumors which have since found to be true, that Secretary of Treasury Steve Mnuchin was trying to rush out some regulation related to unhosted wallets before the end of his term. And this basically said that if you're a virtual asset service provider domiciled in the US and you have a customer that wants to send to a private wallet, you have to know who that private wallet belongs to. So again, if I'm a user at Coinbase and I want to send to Amber's private wallet, I now have to disclose to Coinbase that Amber is the owner of this wallet. And this whole thing was kind of shady, for the lack of a better term, because, you know, generally these comment periods, like there's a proposed approach that's drafted, it goes out to industry, industry is allowed to comment on it and say, you know, hey, do you think about this? Or X doesn't work because of Y. The comment period was extraordinarily narrow. So it was like a 15-day comment period or something like that over the Christmas and New Year's break. And so, you know, industry pushed back on this to extend it back up to the 60 to 90-day period that it typically is. And the problem with something like that, with making a rash decision like that, to Dave's point, is that you start creating friction in a system that was designed to reduce friction, a system that doesn't require intermediaries. So you're taking the intermediaries that don't need to be there, you're applying friction to them. And then of course, this is naturally going to drive activity elsewhere. And if we tie this back to the goal of anti-money laundering and the goal of these AML regimes and the goal of FATF, this is all in an effort to put obligations onto financial intermediaries. This is not intended to sort of dictate the conduct of private individuals. And we're inching closer and closer to some very, very fine lines where I just think we have to be very careful about the decisions that we're making, the implications that those decisions are going to have more broadly for the industry, and then how this, you know, how we roll this out in a way that actually makes sense. Because to go back to my previous comment, all of this was designed for an opaque system. We're not talking about an opaque system anymore. We're talking about blockchains.
Oops, and I am muted. Oh, thank you so much. This is definitely a fascinating discussion. So I have a question. We're talking a lot about like the travel rule in Canada. How do you guys see it being handled in other jurisdictions? Like, are there any other places that, you know, I guess you're mentioning like G7 that, you know, are like, are they looking at trying to implement something for June 1st as well?
I can provide some commentary here. And Amber, I see you nodding your head, so I'll pass the baton over to you. Yeah, this is, so Dave mentioned it, I mentioned it. This is something that we refer to, like I said, as the sunrise problem. So not all of these approaches are going to be drafted and implemented in the same way in all areas of the world. So, you know, you've got places like Switzerland who are much more aggressive in their travel rule implementation. You've got, you know, this big kerfuffle that's happening in the United States, which is being hotly debated. We've got, you know, policies that are coming new to Canada. So this is not going to happen altogether. I kind of mentioned what Cayman's doing. They're just like, we don't care how you do it, just do it. So I think over the coming, I don't know, maybe the next 12 months. I mean, FATF is going to get back together. They're going to talk about it. This is what they did in the 12-month review, right? The recommendations were released in 2019. They got back together in 2020 and said, here's what we've learned from industry. Here's where we see people struggling. So I imagine this conversation is going to continue, but this is not going to happen in the same way in every place in the world.
I think that that's exactly it. We're going to see different timeframes. We're going to see slightly different articulations in terms of the exact data that's required and what the exact limits are from country to country. And that's one of the things that we're going to need to figure out how to synchronize in the long term.
And I'll just add, just from a government perspective, as you know, as the Virtual Asset Contact Group is monitoring, there is a second 12-month review that's actually ongoing, and it's monitoring how jurisdictions are implementing, not necessarily just industry. And again, it's just important to state, like, the international standards are there to set the baseline, and that's hopefully creating consistency across jurisdictions. The problem, again, with this, which has been highlighted before, is, you know, there's going to be different implementation dates. There's going to be different approaches per jurisdiction. Some countries might just ban crypto altogether, like we've already seen. So what we're taking away from it is that holistic implementation at a jurisdiction level is going to be important, but also not only from government, but also from industry. And that's what we're hearing here, especially in this conversation, as Dina mentioned, that it's going to be not only the governments implementing their rules, but it's actually the industries implementing their own policies and procedures and leveraging the technology that's being developed, that we've seen from other companies and other industry associations being put forward. So, you know, Teresa has been doing some good work. I know Shift's been doing some good work. There's a lot of technologies being put forward to try to solve this. In terms of just guessing when the implementation will be, when this will be rolled out, that's very difficult to do. But from a FATF perspective and from a government perspective, we're continuing to monitor and adjust accordingly.
Awesome. So my last question to everyone before we tip it into the Q&A. So FinCEN implemented some regulations around non-custodial transactions. How do you guys feel about this?
I can start with that one. That's an even worse version of the problem that I was describing. So the ability for people to take a transaction into their own custody as an intermediary step and completely avoid the travel rule is a big loophole. But if they were to try to regulate non-custodial wallets, that's definitely going to create that problem that I mentioned of a black market. And so if we're looking at you know, keeping people in regulated entities, I think that's just a disaster waiting to happen. So I hope we never go that far. I don't think that's likely. That's a pretty extreme step in my mind, but it will create more money laundering in Canada if we ever get that far.
Anyone else have any comments around that?
I think I'll jump in and sort of just reiterate, I guess, my message that, again, in the Canadian context and even in the FATF context, the rules are applying the requirements to financial intermediaries, businesses that are offering financial services. I can't speak to how other countries are going to be dealing with peer-to-peer or things like that. But I think, again, it's just important to say that regulations are bringing these companies on the same level set as traditional financial institutions who do the same activities. And from that function base and from that principles base, I think it's just important to know why we're doing these things. And I understand Dave's point about the risk of moving certain activities underground. And that's definitely not the intent. Obviously, we're not trying to regulate criminals. That's not the point of any regulation. But what we're trying to do is actually put a consistent standard across all financial services that are effectively doing the same thing. Using different technologies, yes. Are they different? Yes, definitely. Are there nuances? Of course. But I think when you take a step back and just understand what we're doing from a policy perspective is to put, the same financial services on the same level. And if anything, bringing more legitimacy to the sector. We're hoping that that's the message that's coming across, because we're trying to promote that innovation and trying to promote, industry to bring up their standards and their expectations. At the very least, when we're talking about just the travel rule, it comes down to I think it's even more than just AML, because when you talk about sanctions listing and screening and terrorist listings and things like that, that's an important factor for anybody who does financial service. So again, I know that the FATF and in general, the policies are not well liked by industry, but we were able to work with industry and get a better understanding and consult with industry associations. And over the years, I've been able to get a better understanding and build relationships with the sector. So I completely get your points, but I think we also need to remember why these rules are being introduced, and we're sort of losing sight of that, I feel. But again, the constructive way forward is going to be an important way forward, especially as it relates to government and industry. And I think leveraging industry associations going forward is going to be very important as well, so that you can communicate your positions and views, sort of as we've seen with FinCEN getting thousands and thousands of responses on their proposed rules. I think industry associations need to be leveraged, sort of like the Canadian Blockchain Consortium or other industry associations that can communicate effectively industry positions without being out of focus or disorganized, and being able to have that conversation with government and have that conversation with regulators. And I think, just building off a point that Dave and Dina mentioned earlier, I think that's a conversation post June 1st is going to be, how do you build that capacity? How do you build that conversation and actually improve the relationship between industry and the regulator? Because June 1st is coming. There's no position here where you can just ignore it. To Amber's point about the rule is the rule and here is now, and that's it. We need to move forward together and try to actually implement and effectuate change in a meaningful way. And I understand all the concerns, obviously, but I'm just saying that there's a completely different side to the story that I just don't want to lose sight of that. So wanted to jump in there just to reiterate that. Thanks.
Yeah. I want to jump back in and say, I'm very in favor of anti-money laundering regulations. So to be clear, I just, our industry was very happy to get a lot of clarity from when the regulations did come out, and for the most part are not very burdensome and don't make it difficult for me to compete with a black market Bitcoin seller. But they don't make it overly difficult at this point. I think the concern with the travel rule is that it may make it more difficult to compete with someone who's not complying with those regulations, and that it may actually have the opposite effect. And I think that's where going back to the sort of the first principles of why this is happening, too much of any regulation can achieve the opposite of what it's hoping to achieve. And I think we've passed that point with what's going on here, and the only way that it's not going to have that effect is that very broad and poorly defined reasonable efforts caveat. And so from the industry perspective, I don't think I'd be alone in saying that we need more time and we need more guidance, and that's just black and white.
Well, Dina and Dave, this sounds like a good opportunity to discuss potentially a roundtable coming up to engage with our regulators and industry. So, FinTech Committee. Next call, I'm going to pose this one to both of you. All right, so we do have about 9 minutes left, and I know there's tons of questions for all of you brilliant-minded individuals on this. So, first one from Paul. If the FATF, is that how you guys pronounce this one? FATF amends the travel rule recommendations, which it may in March, April. Will the Department of Finance amend the coming into force PCMLTFR amendments as well?
I think we covered that one, and sorry, that's my bad. I should have marked it as answered.
Sorry. Yeah, I feel so bad. I'm just like, I'm ignorant to this topic. So I'm just like doing my best to like ask questions, probably making
You're
an
doing
ass of
great.
myself.
You're doing great.
Next one. Emma, where are you? Okay, so Paul asked another one. So for sending originating payments, the requirement state shall, which is interpreted to mean it is a must as opposed to the recipient of payments, which is reasonable measures standards. Can you please clarify?
Yeah, so just to clarify, that is what the regulations say. So when you're the ordering institution and sending off information or transfers, there is an obligation to actually send the travel rule information, which is based on your client and what you ask of them. So there is that obligation there. And the reasonable measures is when you receive. So that's where the reasonable measures actually comes in.
Awesome, thank you. All right, I'm not exactly sure how to work this question. So the gentleman said AML trumps privacy for ascertaining identity. Then that would be client consent. No.
But I think that was at an earlier part of the conversation where we were talking a little bit about that tension in terms of information collection and data privacy and AML. And in essence, most privacy legislation has built into it the idea that if you as a regulated entity are compelled to collect and retain a piece of data, that's not going to put you offside with privacy regulations.
Thank you so much, Amber. I'm learning so much from this one. It's fascinating. You guys are brilliant. All right, so another question. Do you think the old systems can make open source programmers across the world comply? As of right now, the best talent, the builders en masse are not on board at all.
So I might offer a comment here. We're not talking about regulating technologies. Remember, we're talking about regulating intermediaries that use these technologies. Does anyone else want to maybe add to that?
Yeah, I can't imagine open source programmers that are building just blockchains in general being required to comply to a money service business.
I think what that might be referring to is that there are a lot of protocols out there, particularly in the DeFi space, that are technically run by an intermediary, and that's pretty vague right now. But if you're if you're holding the self-destruct key to a smart contract, and that smart contract is sending money to a VASP, then there's certainly an argument that you might in fact be a VASP in the first place. And that's, in that case, that might be an enforcement issue, because these people holding these keys may or may not in fact be anonymous. So there could be entities out there that are technically meet the definition of a VASP but are completely anonymous.
Right. The other piece that I would add to that is calling something by a particular name doesn't make it so, which is that to say that I can call something decentralized, I can call it software, I can call it whatever I want all day long, but this doesn't really change functionally what that thing is or how the regulators view it. And I think that we're probably heading for a reckoning in a few different ways. We've had regulators express interest in different concepts and in different projects in a way that reminds me a lot of how regulators talked about ICOs in 2017. And so I do think that there are projects that are going to cross lines and get themselves into trouble. And I think there are other projects that are going to be fine, but the devil is always really in the details in terms of how you set that up and in terms of what your actual business activity is, as well as where you are, where your customers are, what regulators you might be beholden to. As a company, you can't afford not to think about those things.
And I would sort of just add one quick point to Amber's point. Canada's regulations are function-based, so it doesn't really matter what you call yourself, to be quite frank. It's the activities that you offer, and if you call yourself decentralized or not, I mean, at the end of the day, the regulations focus on persons and entities that are engaged in the business of. So that's the key term here, is that once you're engaged in that business or once you're monetizing that service, the regulations would apply to you. So in that respect, it's principle based, but also function based. So whatever you decide to call yourself doesn't really matter. It comes down to what activities you do and how you offer those.
I guess you don't get the, but I want to identify as this versus how I'm actually doing this. All right,
Yeah,
so
you can identify as a smart contract all day long, but if at the end of the day what you're doing is VASP activity and that's its function, then that's how regulators are likely to look at it.
Makes sense. All right, so I feel like this might be more of a statement than a question, but technology fundamentally breaks this. It's the purpose to get rid of needed trust and ID. So I'm just going to leave that as a statement and go to the next question. So is there a path to compliance for VASPs in determining when the travel rule applies? Rodney. Who's Rodney? Who wants to tackle that one?
I think, sure. If there a path to compliance, I mean, I suppose you can just outright ask your regulator how to comply, but this is, I mean, I think this speaks to the whole nature of this discussion, right? Like if you ask FinCEN, they will tell you that travel rules been a thing since 2013 or 2014, you know? So this is really on a case-by-case basis, but if you're a VASP offering services in North America, you don't even have to be domiciled here. If you want to do business with North American VASPs, this is applying to you today. You know, it's coming, it's here, regardless of you know, who specifically you ask, whether it's one provincial regulator or not, like this is a real thing. This is why we keep having these discussions. It's not something that's coming tomorrow. It's something that's been a thing for a little while now.
All right, well, I have a question to kind of go with the question that's being asked here, because this has to do with mining addresses. Are Bitcoin miners now considered money service businesses? No? Okay.
Generally, no, but there's always an it depends. So I can be a Bitcoin miner and also hang up my shingle that says, hey, come by my office and buy Bitcoin, which would make me a VASP, right? So I would be regulated as a dealer in virtual currency because I'm selling Bitcoin to the public.
Okay, because this question's like, if you just switch miner addresses and not send BTC, how does that work? Like one day you're going to Argentina, next is Canada, next is Venezuela, all just point and hash.
That's probably a way more nuanced question where it depends on what you're actually doing as a business and what it is you're trying to accomplish, who you're dealing with. Happy to chat offline if there's a business model that you're worried about and kind of looking to get a sense of whether it falls into regulated activity or not. The other thing that I will pump that Fintrac does is they actually answer such questions for free. I think it is more valuable than my opinion or a legal opinion to send them a well-crafted question and get that answer from the regulator, depending on the circumstances, especially if you're dealing with something that's unusual or an edge case. And our team is always happy to help people write those as needed.
Awesome, thank you. All right, so last question. I won't tie you guys up for too much longer. So will Unislop or other DeFi protocols have to register with Fintrac as foreign MSBs if Canadians utilize their self-custody wallet? I swear I know who's asking these questions. All right, who wants to go for that one?
I'm not the regulator, so first and foremost, I'm not Fintrac and I don't speak on behalf of them. But I think it's important to just, again, with all of these questions, they're very nuanced. The regulations themselves are, again, function-based. So it depends on what kind of activities or services you're going to be providing your clients. So in that respect, my non-answer is that if you provide financial services using Uniswap or any different types of protocols, I think that will make you an MSB if you provide the value transfer service or exchange services. But to Amber's point, it depends. And that's what I'm talking about is very important is as we approach June 1st, engagement with the regulator, especially in the Canadian context, is going to be fundamental for industry to understand what the regulatory expectations are, where the boundaries are, and just understanding how to operate within the rules. But again, just to repeat, the regulations are function-based. Whatever you call yourself, we don't really care. It depends on what services you provide to Canadians, and that's the test. But if you need more certainty, Fintrac would be there to provide that kind of guidance.
And on the topic of DeFi, I mean, this is something that global regulators are discussing. This is not just a matter for the technology industry. This is something that came up with nearly all of the service providers that presented at the last FATF virtual contact group meeting. You know, everyone had something to say about DeFi. So while they're, you know, it sounds like the position that we're taking is it's all about the nature of your business. While that's probably the most official answer that anyone can give at this juncture, this is a space that the regulators are definitely thinking about, and they're looking at and they're scrutinizing.
This kind of reminds me a little bit from kind of like that 2017 when everyone was launching ICOs, and then they realized regulations actually existed, and they're like, oh no, wait, I'm a utility token. And it kind of seems like that's happening right now in DeFi. It's just like, oh wait, well, I'm going to identify as something other than, you know, this, so that I don't get regulated. So it's kind of interesting to see how people are constantly trying to move around it. But we are at 12:33. So thank you guys so much for joining this webinar today. I really, really appreciate your time and definitely your insights. I know I've learned lots. I hope all of our attendees have learned lots. To anyone out there, if you're interested, we are hosting, we have webinars every month, podcasts every month, and classes every month. Our next class is on blockchain and economics, if you're interested in that. And I do believe we have an anti-money laundering webinar coming up as well pretty soon. So please stay tuned, sign up for our newsletter. And again, thank you guys so much. Virtual round of applause to all of you, and have a wonderful day.
Thank you for having us.
Bye, everyone. Thank you.
Thank you. Bye.